Hello everyone, we are discussing the area financial instruments, and today's our discussion will confine towards the accounting under the fair value method. Now, what we want to talk about is that financial assets can be categorized under fair value method also. For that matter, fair value is the default category that we want to use. Now, under the fair value method, we are suggesting that if the conditions with respect to the cost model are not met, financial asset is automatically designated to be taken through fair value method. What it means is that if those conditions are not met within the cost criterion, then we have to use a fair value method. Now, which actually suggests, let's say if there's a financial asset in which an entity makes an investment of say 10,000, the fair value of the asset on the balance sheet date is 12,000, which means that the balance sheet must show this asset at 12,000. Right now, the bigger concern or the bigger question that we have, which we must address, while the asset is increased by 2,000, which means we would have increased by doing a debit, where should the gain be accounted for? Where does the credit go? Does it go into reserves as an unrealized gain or loss, as the case may be? Because in this case we are talking about a gain, but it can always happen that there is also a loss, or through the P&L as a realized item. That is what is the question that we want to talk about. In a layman's term, very briefly, we're talking about it. If the financial asset is held for trading, speculation, or maybe short-term basis, the default category is fair value through P&L, right? Which actually means that if I say in the above case, the financial asset is held for trading purposes, then the accounting for the movement of 2,000 and above case will be done as debit investment credit P&L, which is here. The justification given by the standard is that since the intention of the investor in financial asset is to realize profits, the increase or reduction in the value of the asset should be taken through the P&L or the income statement, right? We are not saying that the asset has been sold. We have not sold it, right? The asset is still in the books of the entity, but then since the intentions are to make a gain out of it, we are showing it as through the P&L, which actually means if a financial asset categorized under fair value method is shown in the books and is not held for trading purposes, this is automatically routed through the reserves or under the equity. For example, if I say that company X owns 100 shares in company Y, which it acquired for, let's say, 100,000, the fair value of the shares on balance sheet date is 80,000. The objective of the investment by company X is to hold these shares for long term. Now, what we certainly understand, we need to first of all ask a question to ourselves: does the cost model apply to the financial asset? The answer is strictly no, because there is no specific cash flows or recovery of principal or interest in case of shares, which means that the shares are always categorized at the fair value. So now the second question that comes is whether the shares, the changes in the value in the shares is to be taken through the P&L or should it be taken through the reserves. So we are asking a question to ourselves: the P&L category does not apply the change in the value of the investment since it is being carried for a long-term purposes. Please bear it in mind, there is nothing defined what is meant by long-term purposes in the standard. So is routed through the equity, which is also referred to as comprehensive income, and accounting would happen like this: debit other comprehensive income 20,000, credit investment in shares, which is 100 minus 80, again 20,000. Are you fine with that? So that is how you look at the accounting part under the fair value. What we are discussing here is there are two categories within the fair value. One is saying that if I look at the financial assets, within that there is a cost aspect, and then there is of course a fair value aspect. Here we are saying that within the fair value you can either use a criterion of through P&L, provided you are trading or you have defined it like that, or through other comprehensive income or the reserves. Are you fine with that? We're going to discuss further in terms of how does the accounting go for the initial measurement part and the subsequent measurement part under the cost as well as the fair value criterion. Thank you very much.